Kunal joins in. Let's talk about what he's making of the market texture right now. Kunal, hi, morning. Little bit of a choppy session yesterday, but given the global weakness this morning, Kunal, what are you pegging the day to look like?
Good morning, Aisha. So I think yes, the markets have been range bound. We've been stuck around this 24,000 mark for the Nifty. It was a little bit of I would say, a negative day for the Bank Nifty. But then when we look at the market breadth overall, it just gives a sense that the benchmark indices have been trading in a very flat bias. Just look at the example. I think for the last 5 consecutive weeks, the Bank Nifty has been giving a close at this 57,500 mark plus minus 200 points. So that tells you that the closing for the last 5 weeks of the Bank Nifty has been very, very flat. Even the benchmark index, that's the Nifty, even that's over the last 5 weeks has closed almost at the 24,000 mark on a weekly basis. So that tells you that the markets have been very, very listless and range bound, and we need to see some signs of maybe a trigger or sorts for the index to break out. The level on the upside is still at 24,000 to 5300 as a breakout for the Nifty. But on the support side, 23,800 is a crucial support. So difficult to judge which side the markets would probably break out or break down. But then we'll have to wait for that levels to be taken out.
Kunal, hi, morning. You have nearly 8 bank earnings coming out on Saturday, and today you're going to see some kind of volatility in the Nifty Bank and Nifty Bank companies. How do you play a Nifty Bank?
See, I think for a short-term perspective, I will still believe that it's better to be a little bit more lighter on the bank index. What was happening is over the last say 2-3 weeks of this 5 weeks of consolidation in the bank Nifty, the initial 2-3 weeks is where you saw the private sector banking stocks outperforming. Then in the last week or so, and in fact this week, we are seeing many of the PSU banking stocks coming back into a bounce back mode. And in that process, the large cap private sector banking names, the likes of Axis Bank, HDFC Bank, etc., these stocks have taken a bit of a backseat and gone through a profit booking. So it looks like that it's a churn within the trend of the banking index, and the trend is very, very flat for the bank index over the last 4-5 weeks. So it's a churn which is going on within the banking index right now. That's why I would believe that it's better to be a little bit more lighter as of now. The real or the two strong sectors which have been performing very well so far in this week have been the real estate as well as the Nifty IT index. So I think it's better to concentrate over there in terms of the sector themes. But otherwise, I would suggest that it's better to be a little bit more on the lighter side.
And IT companies, do you think we've been seeing some bounce back in Nifty IT and some of the IT companies there? How do you see the IT companies like Infosys and TCS?
I think the trend over here is very, very strong. I sense that Infosys, TCS, HCL Tech, I think the kind of breakouts with these stocks have shown in the last week, 10 days, I think indicates that there is a decent short-term trend in the making. So, I was doing this relative strength study where within the IT stocks, which are the ones which have done reasonably well, and apparently names like Persistent, HCL Tech are the ones which have done very well for themselves in terms of the price jump, which these stocks have shown. Of course, the best performing stock in the IT pack is actually Oracle Finance. But leaving that aside, the ones which have been showing signs of recovery from their previous lows, I think it's HCL Tech which has done reasonably well, Persistent which has done very well from its from the mid cap IT space. Infosys, on the other hand, that stock is also showing signs of a consistent confirmation of support at 1040, 1020 plus, which is a very strong support now for the stock price, and it's seeing a constant bounce back from those levels. So I would sense that large cap stocks and few of those odd mid cap IT names are the ones which are looking very strong. It's better to concentrate over there.
Interesting. Kunal, I want to also quickly take your view with regard to some of the tyre companies. And this is on the back of SIAT's numbers also, which came out very weak set. 10 plus quarters, not seen margins of single digit, and that's what it's clocked this time around. But give us a sense, JK, Apollo, SIAT, how are they looking on charts? How should one position themselves?
Actually, what had happened was in the last 6 months from end of November, end of 2025, many of these tire companies, they had fallen by almost 25-30%. I'll give an example. For example, CAT was almost at 4,200 levels. Fag end of 2025, that stock fell down to 3,200 levels. JK Tyre, for example, I think was almost 600. The stock had fallen down to 380, 400 mark. So many of these tire stocks over the last 6-8 months had already gone through a 30% kind of a correction, and now they are in the process of seeing a bounce back for themselves. I would sense that many of these tire stocks seems to have formed a solid near-term, medium-term bottom. Results, etc., they would probably disappoint, but then these stocks may not come back to their previous multi-month swing lows, which they have hit almost 2-3 months back for these stocks, because there's already been a 30% correction in line for these names. And in case if these stocks come closer to retesting their support, I would actually believe that it's a good opportunity to go for a buy. From the tire space, as of now on the charts, I think JK Tire is something which looks extremely strong and attractive. The stock forming, technically we call it as an inverted head and shoulder pattern. That's something which is formed for JK Tires.
Other than tires and the spaces that we spoke about, Kunal, any picks for the day?
Yes, Aisha. So chemicals is apparently one of the other spaces which is looking attractive. And from that space, SRF is something which starts to come back into a breakout mode. And the stock has come out of a breakout of almost like 7-8 weeks of consolidation. So that's something which looks attractive on the charts. Would suggest a buy on SRF with a target of 29.70. Stop loss could be kept at 28.60 mark. The second would be a buy on Motherson, Samvardhana Motherson. Even this stock from the auto anch space, I think this has been one sector which has done very well rather than the traditional OEMs. But then I think Samvardhana Motherson on the short-term charts is also eking a breakout. Looks attractive for a target of 149, stop loss at 139.
Now, firstly, a take on IT. And given the kind of volatility that's been playing out on IT, one up day, one down day, today, what do you sense?
So I think largely the trend for the IT stocks is into a recovery path. We were discussing this point that there's been a pattern where there has been one strong day for the IT stocks followed by 2 successive days where the prices go into a correction. Like for example, the previous 2 days, at the start of this week, the IT stocks showed 2 days of correction. Yesterday was one of those days where we saw the IT stocks at the start up being 1.5 or 2% on the positive side. I would sense that there is a strong base for the IT stocks, which is at 28,000 mark, 27,600 on the IT index. And till the time we hold on to this support level purely on the short term basis, there is a case that the IT stocks can build up further.
Right.